How did we make $7,000 from just a $40 account? That's very, very possible because we did it. Sent a signal on the VIP group. We took the signal. I had an equity of $40 on one of my accounts, and I used a lot of lot sizes, and boom, it gave us $7,000. How did we go from this to this? This is Milk DERIV, and all we do is Milk DERIV. Before the chat, I want to state things, very, very well before you take trades, in DERIV. I've tried trading the currency pair, and I don't think it has the same principle as DERIV, because a lot of sizes are using DERIV that make me a lot of money within just small time and with small equity. I don't really think it's that possible with currency pairs, so I don't think you should. I don't think it will work in currency pairs, but for DERIV indices, the volatility indices, the boom and crash, and the rest, it will definitely work with them, especially when you're trading a high volatile index that's moving all the way fast and the rest. So yeah, those ones are actually very nice, and you can easily make your money through those ones. So that's why I trade DERIV, because it's one of the best things to trade. That's just one. Secondly, if you want to actually grow a small account and you really want to, then you must have the experience. And you must know how to trade price patterns, price action, price patterns. Yeah, almost, if you want. It's going to be very difficult for you if you're using moving averages. Why I say this is because if you want to grow a small account, you want to take a $100 account to 7,000 to 10,000, or you want to take a 200 account to 20,000, or like I did, a $40 account to 7,000, you must take it at sniper. The trade must be at sniper. You shouldn't just take it. It should be from the point where the trade is, then the market is going up. If you're taking a trade at a point and then the market starts coming down, maybe just a little drawback before actually moving up, then that's actually very, very bad and very bad. You will lose a lot of money. For you to trade a small Forex account, it must be sniper entry. Must. There's no two way about it. It has to be sniper entry. That's the only means that you can actually make money trading a small Forex account and taking it to a big one. So I think these are just the basic principles. So you don't need moving averages, you don't need all those things. What you need is price action, price patterns, where you can actually read the charts. And if you know it the way I do, you can actually know when the market is going to buy, and you check your risk to reward. You take such trades when the SL is not far from the entry point, where you know that even if it goes to the SL, at least your money should still be there. That's how I do mine. So the procedures to trading price patterns, I'm going to repeat it here. The first thing is always take your trade from the higher time frame. You must take trades from the higher, from the lower, but the first analysis you must always come from the higher time frame, and then you compare your higher time frame with your lower time frame. It must be in the same accord. If the higher time frame is saying something different from the lower time frame, you don't take the trade. If the higher time frame is telling you to buy while the lower time frame is telling you to sell, no. You should only take trades when the higher and the lower is telling you the same thing. And for those who use their phones to analyze markets, I kind of divided the time frames into three, where we have the M1, the M5, the M15. That's those that use MetaTrader 5. The M1, the M5, the M15 as the lower time frame. Sorry, M1, M1, M5, M15 as the lower time frame. The the H1, the H4, the D1 as the higher time frame. Then the M30 as the intermediate time frame. So this will help you a lot in trying to analyze your market, so that when you want to distinguish between the two, both of them must be in accordance. The M15 and the H1 must be in accordance with whatever thing you want to trade. The M30 is the only exception. You can have M5 telling you to buy, M30 telling you to sell. And then H1 telling you to buy. Then of course you should buy. That's higher and lower is agreeing. The M30 is just the exception. It can tell you anything. It's just there as as the vision line or something like that, just to divide between the two time frames. Now, this is just for those who use MetaTrader 5 to trade, and TradingView as well for the analysis. Yeah. So I think that's just it. And always analyze from the higher time frame is very important, and make sure that the high and the lower is agreeing to the same thing. That's just one. And like I said earlier on, because it's moving a small account to a bigger account, it must always be at sniper. Always. You cannot move a small account to that kind of amount when it's not a sniper. It's not possible. That is two. Number three, which is very, very important, you should not just close the trade anyhow. No. For me to hold this trade, what was the trick there? The trick there is until the trade breaks out of this my red trend line. If it doesn't, I'll still have to hold the trade. Until the trade breaks out from my red trend line, it is still valid. And that's how you keep trades. Don't go and say, I'm afraid of holding this trade. What might happen? All those kind of things. It's wrong. Always hold your trade and always make sure you make maximum profit from each good trade you get. Each good trade you get, make sure you make maximum profit from it. Don't go and say, at least I made $1,000. It's okay. It's not okay. Make sure you make a lot of money from it. Guys, this is the chart. As you can see, we've already analyzed from the higher time frame. This is 1 week where I drew this trend line here all the way down here. So the trend line is very nice. And I'm going to delete some of the things we've done already so that I can show you the analysis better and you understand why I took the trade. Now this one now is useless already, but okay, let me just delete everything and so you understand really why we made the trade and why I'll be closing the trade now. So let's go to the D1. We've already had the analysis from the W1 time frame. Now let's go to the D1 and see what we're going to get. So we're having drawing this. As you can see here, this market sold here, came here and broke out. And remember what I always said in my YouTube videos, once there's a breakout of a market, there's always going to be a retest. And the retest happened here at the. So guys, as you can see, the market broke out, or the market broke out here and came and retested here. So that's to tell you that this market is, actually very nice and the market is valid. So I can as well decide to delete this trend line. Why? Because it has been invalidated. Once there's a breakout and a retest, that means invalidation has taken place. That means that trend line is no longer efficient, at least for now. So I can decide to delete it. But most times I decide to leave it so that I know actually what the market is telling me, that I got a buy signal from the higher time frame analysis. So it's always very nice like that. If you also want to continue with the higher time frame analysis, now this market came here and retested, right? So there's meant to be a buy, right? So now if there's meant to be a buy, you don't just take that like that. You take buys at the retest of the sell that happened before. This is what I mean. This is a buy that I'm expecting here, but I should take it where at the retest of this sell that happened before. So how do we get that retest? We always start from here and draw. If you have done it like this, draw it like this. Cool. Then here, we want to find the retest of the sell that happened. Here. So this is perfect. I could just say that the retest happened here. There was a breakout here and the retest happened here. So I'm good or clean to go for my buy. You understand? So this market is telling me to buy in D1 and in H4. I want you to note it. In D1 and H4 it's telling me to buy. So if I go to the H1, let's see what we'll see here. in the H1. If you just want to go all this way, it's way longer and the rest. So we want to use this now. This is how it's meant to be normally, but as you can see here, there was a little movement here, so this is invalid, it's not correct. So I have to take the trend line above it, and that was where we got the sniper entry to take this trade. To confirm that, you can go to the lower time frame, maybe M5 or M15. Remember what I always say, the higher time frame and the lower time frame must agree to the same thing. And as you can see, you can see how everything is agreeing. M4, D1, H1, M15, M5, all are telling us to buy. And I bought the trade here, and it has made us a lot of money. Now, for me to hold this trade, what was the trick there? The trick there is until the trade breaks out of this my red trend line. If it doesn't, I'll still have to hold the trade. Until the trade breaks out from my red trend line, it is still valid. And that's how you keep trades. Don't go and say, I'm afraid of holding this trade. What might happen? All those kind of things. It's wrong. Always hold your trade and always make sure you make maximum profits from each good trade you get. Each good trade you get, make sure you make maximum profit from it. Don't go and say, at least I made $1,000. It's okay. It's not okay. Make sure you make a lot of money from it. This is Make DERIV and all this Make DERIV. If you like the video, make sure you to like, subscribe, and basically that's it. We'll see you next time.